Latest job numbers are in, and this morning the Labor Department releasing the results for May. CBS News business analyst Jill Schlesinger joining us live this morning from New York to break it all down. Jill, good morning.
Good morning.
Yeah, so tell us, what were the results?
Better than expected, gang. 272,000 jobs created, and we thought there were going to be maybe 175, 190,000. So 272 is a big number. The unemployment rate ticked up to 4%. So that was from 3.9%, not a huge increase. Wages, this is an important one. Wages on average up by 4.1% from a year ago. Why is this important? Because we need wages to rise by more than the inflation rate. And we are ahead of the inflation rate. Inflation came in at 3.4% last month. We'll get a new reading next week, but 4.1% is a pretty strong showing on wages.
Okay, so some pretty good indicators here. What does this tell us about the overall market right now?
You know, I think it's very confounding. I feel bad for economists and analysts because they're trying to intake all of the data that they are receiving. So they're seeing like, hey, job openings are down, and that might indicate that the labor market's cooling off. And another piece of information that might have misled them is that the number of people quitting has slowed down. But layoffs are at their lowest level since December. And the reality is, I think the labor market is trying to normalize after that crazy post-pandemic era pace. But it is still really hard to predict, especially when companies are saying like, well, we're seeing consumers pull back. You thought they wouldn't hire as much. But this number really does belie that fact. I think we are seeing real strength in the economy in certain areas.
So you look at that, you look at the inflation. The Fed is meeting next week. How do they interpret all this data if it's even tough for the economists to take a look at?
Yeah, exactly. Okay, this is what I wish they would say, which they're not going to say. We're going on vacation for the summer. See you in September. That's really what they're going to say. Because, look, they want the labor market to cool down a little bit. And, you know, importantly, we love getting wage gains. The Fed does not like that. The Fed wants to see wage gains come down. Why? Because when wages come down, we consumers, we slow down our spending a little bit, and that can really help bring down the inflation rate. So until we see the labor market kind of cool down a little, Fed's going to do nothing. See you in September, Fed officials. Have fun at the beach.
Well, Jill, I was going to ask you about your favorite donut, but we've ran out of time.
Yep.
So we appreciate it as always. We love you. You can see Jill regularly on CBS Mornings and the CBS Evening News with Nora O'Donnell. For Nora analysis, you can go to JillOnMoney.com.